Okay, let's dive right into this explainer. Today, we're demystifying gold IRAs and delivering an objective, strictly data backed review of a pretty major player in the space, Allegiance Gold. We're going to look under the hood at the data, the fees, and most importantly, the fine print to figure out if they can actually help protect your hard earned retirement. So, this is the absolutely crucial question facing cautious retirees today. With inflation concerns and just wild market volatility, a lot of us are looking for safe havens. But let's be real, navigating the precious metals industry can feel a bit like walking through a minefield of marketing speak and hidden fees. So, we're going to use cold, hard data to cut through all that noise. We'll find out exactly what you're getting into and whether Allegiance Gold is actually the right partner for your portfolio. We've got a lot of ground to cover today, so our agenda is going to take us through 1, the Gold IRA basics, 2, who Allegiance Gold is, 3, a breakdown of their fees, 4, the pros and cons, 5, ratings and reputation, and finally, 6, our verdict and next steps. All right, Section 1, the Gold IRA basics. Let's demystify physical precious metals in retirement. Now, the real differentiator here is the word physical. A gold IRA essentially lets you roll over existing retirement funds, like from a 401k or a traditional IRA, into a self-directed account. And instead of paper stocks, it holds tangible, physical metals in a highly secure, qualified depository. It's designed as an inflation hedge and a portfolio diversifier. But, and this is a critical trade-off our data highlights, physical metals generate literally zero yield. No dividends, no interest. Plus, they can't be sold instantly like a tech stock. Liquidation usually takes a few days. Because of this, financial experts generally agree that you should keep a gold IRA sized at about a 5 to 15% portfolio allocation rather than completely replacing your equities. And the IRS? They do not mess around when it comes to purity requirements for these accounts. You can't just toss your grandfather's vintage coin collection or a random gold watch into your retirement account. No way. The IRS demands a minimum purity of 99.5% for gold and up to 99.95% for platinum and palladium. We're talking highly specific approved products here, like the American Buffalo Proof Coin, the Canadian Maple Leaf, or those 1-ounce Credit Suisse bars. Because the rules are so intensely strict, working with a specialized dealer and an IRS-approved custodian isn't just a good idea, it's an absolute requirement. And whatever you do, you cannot hold these metals in your own house. Doing that triggers a full distribution and a massive tax penalty, which is exactly what we want to avoid. Moving on to Section 2, who is Allegiance Gold? They're a boutique provider focused on education and accessibility. 13 years. Our sources indicate they've been in continuous operation out in California for 13 years now. They were established back in 2013 and actually just recently moved into a massive 18,700 square foot headquarters in Calabasas. So they're really establishing themselves as a steady, growing presence in this industry. In fact, they were recently named to the Inc. 5000 list of America's fastest growing private companies. What really stands out about their whole operational philosophy is this education-first approach. They don't rely on those high-pressure transactional sales tactics you see elsewhere. They actually provide resources, like their CEO, Mark Nauman's book, The Perfect Fit, to genuinely help investors understand the transition from paper to physical assets. To make the IRAs happen, they partner up with top-tier IRS-approved custodians like Equity Trust and Strata. And for storage, they use the Delaware Depository and Brinks Global Services. They even offer both commingled and segregated storage, all backed by Lloyd's of London Insurance. By the way, segregated storage just means your specific coins and bars are kept entirely separate from everyone else's. It's like having your own private shelf in the vault, which offers fantastic peace of mind.
Okay, Section 3, breakdown of fees. Let's talk about the real cost of ownership here.
Now, for the part every serious investor cares about, the fees. The data shows Allegiance Gold is highly, highly competitive. They charge a one-time setup fee of $50, and their annual admin and storage fees range from $125 to $195 total per year. That depends on your account size and whether you opt for that segregated storage we just talked about. This is significantly lower than the industry average, which can easily push $300 a year. Plus, for a lot of new accounts, they'll actually waive the first year's fees entirely. As for the minimum investment, you'll notice a slight split in the industry data. Some research hubs say they have zero minimums, while other sources quote a $10,000 minimum. This inconsistency usually just means the minimum varies based on the specific purchase or current promotions. But honestly, even at $10,000, it is incredibly accessible compared to mega dealers who demand upwards of $50,000 just to get your foot in the door.
But hold on, before you signed on the dotted line, you have got to factor in the buyback spread. So when you hit that age where the IRS forces you to start taking out money, those required minimum distributions or RMDs, you'll either need to take the physical metal itself or sell it back to the dealer. And when selling it back, dealers typically pay 2 to 5% below the current spot price. It's sort of like a hidden exit fee. Actually, scratch that. It's just an industry-wide reality baked into trading physical assets that you need to be aware of. Now, Allegiance Gold does have a buyback program to make liquidation smooth, which is great, but they don't explicitly guarantee repurchase, and you absolutely need to plan for that 2 to 5% spread when you're calculating your long-term returns.
All right, Section 4, the pros and cons. Let's take a purely objective look at the trade-offs. Weighing this all out, on the plus side, you're getting excellent, low annual costs, those often waived first-year fees, and incredibly accessible minimum entry points. Not to mention, you get access to all 4 IRS-approved precious metals. But there are trade-offs. You do have to pay that $50 setup fee. They also have a bit less mainstream brand recognition than the massive, heavily advertised competitors out there. And one really notable drawback reported by analysts is their lack of robust digital self-service tools. If you're the kind of investor who expects a slick, modern mobile app to tweak your portfolio at 2 a.m., Allegiance Gold might not be the perfect fit for you. Section 5, Ratings and Reputation. Let's see what the independent data and actual real-world customers have to say. The independent data across the board is just incredibly strong. They boast a near-perfect 4.9 out of 5 on Trustpilot with hundreds of reviews. Investing in Retirement gives them a solid 4.6 editorial rating, and IRA Research Hub gives them high marks specifically for fee transparency and IRS compliance. On top of all that, they maintain an A+ rating with the Better Business Bureau and a remarkable AAA rating from the Business Consumer Alliance. And that AAA, that is literally the absolute highest rating that organization issues. And when you dig into the real Trustpilot reviews, you immediately see why they score so highly. You keep seeing specific names popping up over and over again. Ricky, Sean, Hanny. It really highlights their boutique, personalized approach to portfolio management. They assign a dedicated senior portfolio manager and an IRA specialist to every single client. Reviewers just consistently praise their patience, their focus on education, and the fact that they never make you feel pushed into a hasty decision. Finally, Section 6, Verdict and Next Steps. Is Allegiance Gold the right fit for your portfolio? Ultimately, the data points to a pretty clear conclusion here. Allegiance Gold is a highly legitimate, very appealing choice, especially if you're a cost-conscious investor looking for low annual fees paired with a boutique concierge-level service. Their accessibility with those low to zero minimums is practically unmatched. However, they are definitely best suited for people who'd rather talk to a dedicated specialist over the phone than try to manage everything through a mobile app. And don't forget our golden rule. Keep your physical precious metals to a sensible 5 to 15% of your total portfolio. That ensures you maintain proper diversification and liquidity. So, what does this all mean for you? Well, the absolute worst thing you can do for your retirement is to just sit back uneducated about your options, while inflation quietly chips away at your purchasing power. If you are a serious retiree ready to proactively explore wealth preservation, do not wait. Check out the link in the description below right now to get your hands on a free, comprehensive gold IRA guide. It's going to arm you with the knowledge you need to dodge the gimmicks and make the smartest possible choice for your financial future. Because at the end of the day, you have to ask yourself, is your retirement strategy built on a solid, tangible foundation, or is it just relying on paper promises? Thanks so much for joining me on this explainer, and I will see you in the next one.